Good morning, guys. Welcome to this Tuesday, July 29th. And at this point, it looks to me like we have a market which is trading higher. We got I forget what we got yesterday. Just some news came out, and just draw a blank on that one. However, the market is holding on to the gains. Yesterday, we backed off a little bit from the highs. Uh, We had a pretty good pop going into the overnight based on the EU deal in the weekend and over the weekend backed off a little bit. Now we have been slowly grinding back up again. And yeah, they had Boeing earnings came out, and I think it was good revenue, missed on the beat. We have Microsoft and Meta coming out tomorrow, Amazon and Amazon and Apple on Thursday, I believe, in earnings. So we got some stuff coming out in terms of earnings. Right now, though, the market is just holding on to the gains, and we are in stage one again, extending to the upside. So we are in a nice little rally. I'm not seeing any signs of weakness just yet from the seasonal weakness part of this. I think it has everything to do with the trade deals coming through. They announced a few more trade deals over the weekend. Not as important as the EU trade deal, but I mean, they've done a deal with Japan, they've done a deal with the EU. So all the big trading partners seems to have fallen in line. So anything which happens now, after August 1st in terms of bigger trade or bigger or just the real flat out tariff announcements is probably gonna not have any huge impacts. However, looking at this right now, we just kind of had to keep trading this one alongside of the market, see how far they can take it. So some interesting, uh, interesting projection for Tesla. I don't know if you know this guy Keith Fitz. He's a fund manager. He's on Fox Business quite a bit. He has some interesting takes on the growth potentials. And I was thinking Tesla at the $20 trillion valuation in maybe 15 years or so, 10, 15 years. And it's like, yeah, well, AI will do that. The AI trade is exactly what's going to do that. So some of these tech companies now, which looks like they are huge, may not look so, may have a huge potential left given the AI trade and the kind of productivity you can get if you get that implemented correctly. So looking to buy the weakness for rotations back up at this point. I think we have a starting to see an edge develop here at the 6400s. And we have a set of support areas kind of crunched together a bit there. And then we are slowly, then we have a little bit more spaced out here on the way up. But it looks to me like they've been backing off. They've been testing on the way up. They've been backing off, reverse retesting this on the way down. And you can see here we have 3 days of that stuff going on. If you go take this over, so you can see here. This is Friday's trading. Here's Thursday's trading. Wednesday we had a nice pop to the upside. So we got some stuff going on here. Today, though, we have Fed meeting beginning in terms of news. What else do we have? Economic calendar. Um, Fed meeting begins today at 8:30. We get international trade. We get wholesale inventories, um, and wholesale and retail inventories. 9 o'clock we get housing data, Case Shiller and FHFA. 10 o'clock we get consumer confidence and job openings. And then we have a couple of small auctions, a 2 and a 7-year auction coming in at later in the day. So we got some stuff going on there in terms of news. 8:30, 9 and 10. And the Fed meeting begins today. So far, I'm not seeing any signs of selling, as I said, but uh, as I always say, the volume is picked up a little bit. It's not that super light volume it was light last week. So we got a little bit more volume going on this week. You'll see, and with the trade deals going on right now being made, if the earnings keeps coming out good, especially the tech earnings coming out tomorrow and on Thursday, I think we have been holding on. But as I say, we had to get through this week. And remember, also we have inflation data coming out on Thursday. We have the employment situation coming out on Friday, and this is the last week in July, last trading week of July. So this has a month close. We're in the beginning of the third quarter, so I'm not expecting big changes because it's end of the month. Starting off from the long side, looking to buy weakness. at this point against the 6430s, 6420, 22 to 25s, 6410, 6400, 6395, 6385s. So here you have the little cluster of support areas, and you can see they're just lining up there. And I would say that if you get into this area, looking to buy this area, uh, any of them could potentially hold, or they could run it down and kind of run the stops below the lowest one. You just never know, but it's looking for weakness, going to buy against these support areas below the 63.85s. We're taking off that long bias and going back more range bound. At that point, I think this move to the upside may have been cut off. So pretty good moves to the upside at this point, and we'll see if they can keep it going. So not expecting just a straight shot to the upside. It's going to be volatile back and forth, but it looks like it's net moving higher, and we're just going to keep trading with the direction, keep trading with the capital flow. Any short opportunities against the 6440s and 6455s with a bit of caution. There's no point of being super aggressive on the long side. You do get pretty good short. Sorry, there's no point of being super aggressive on the short side, not the long side, short side. But there's no point of you do get these nice rotations down, and it's not a good example right now. But you do get these little rotations up here when they pop, and then they run it quite a bit harder on the downside. Those are good intraday kind of scalps, and those are well worth taking if you get a good setup and a trigger. But I would prefer, if you want to be patient, wait for those things to happen and then look to buy against the support areas if you get a good setup against them. I think that's the ticket right now until such time that they start taking out these three support areas. So in this whole area right here between the 6430s and that low at the 6385s, that's what we're looking at doing. Below this area, if they start taking out the low here at the 63.85s, I'm going to think more about it, more for a retracement trade heading back towards this attractor right there at the 6400. Sorry, at the heading retracing this low volume area down to the edge here to 6350. So that's where I think they're heading if they take out that 85 level. And that would basically take out this little volume. This isn't little volume edge, right? At 6400 here. So this whole area of support is what I'm talking about. So this is these four support areas. Sorry, these four support areas right there. I'm going all over the place here, but so for 6410 down to that 6385, and that's going to be this area right there. So if that comes out, then we have then we take off the long bias going back range bound, looking for retracement of these single print E-prints and this whole low volume area. So looking for that to retrace back down here to that 6350 at that point. And I think we probably need a piece of news for it. I think a little bit more than just the technical pullback at that point. So the technical pullback, algo pullback, if you wish, probably needs to hold this area of support. If all that stuff comes out, I would be taking off that long bias and going back more range bound. So looking to buy 6430s, 6420s, 6410s, 6400, 6395, 63 and 85 for rotations back up. Below 85s, take off the long bias, look for retracement down to that 6350 area. So that on the way up, shorts against the 45s and the 6455s with a bit of caution. No reason to be super aggressive on that. All right, so that's the ES to get started, looking at the NASDAQ and the bonds. And you can see how the bond market is just not doing anything. Not spending much time on it right now. It's just range bound. If you want to trade it, just fade the edges. At this point, short against the 24s and the 30s. Looking to buy against the 07s, 02s down to the 12, 28, 29s here. They're going to stay in a fairly narrow range. I think above the 13, 29, 20 to 30s. And below this area, the 12, 24, we may have a directional move going, but as you can see, they've been probing the sides back and forth, back and forth, back and forth. And the only thing with the results in is just coming to balance. The moves are getting smaller and smaller. Eventually, we'll get the move out of the middle. And this week could be the week. This week we have a big news coming out with the inflation data, employment situation, so on and so forth, all which could potentially move it. We'll see. But at this point, just a range-bound trading. Fed announcement tomorrow could also move the bond market pretty good. So we'll see what happens there. Um, and I think the consensus is that they're not going to do anything. The Fed announcement is going to be pretty much we're going to hold the rates high. And of course, there's going to be a bunch of backlash on that. So we know the trick. If they drop the rates though, and that would be more, I think, a surprise. I think the market just keeps going at that point. Nasdaq, look at that guy go. So the ES kind of stumbling a little bit. Nasdaq has been just straight shooting up right now. They were slow to break out, but now they're still holding, still being able to move higher. And I think that comes up with tech earnings, some small tech earnings as well. I saw some companies come out, and one company, one of these the integrators, the hyperscalers like Supermicro and stuff. Supermicro is up like $6 in the overnight. So some of these stocks, no, sorry, that was yesterday. That was in the overnight, yeah, in aftermarket, they were up $6 or something. So they had some big moves going higher on some of these hyperscalers, and that's just those are mid cap kind of stock, mid cap to small cap kind of stocks. So that starts moving the Nasdaq higher, and then you have a much broader move in the Nasdaq, and that would be helpful. Tech earnings coming out could certainly keep this going, and I would just stay on the long side on the Nasdaq, favor the long side. Looking to buy weakness against the 580s, 540s, 500s, 470s, down to that 420, 430s, same as yesterday. Below that 420, that's that little low volume area you see right there. So if that thing comes out, I think we're back in that lower range again. So below 430s, take off the long bias. I would look to buy all the way down here. Nasdaq could potentially probe a level lower than that at 370. It would not surprise me. They tend to be overshooting stuff like that when they do lean into it. But if you start seeing a move like that, early weakness, which really leans into it like that, you may want to try a short trade earlier on as they take out that 550 or the 510 here. So if these two support areas comes out, if you're thinking we are looking at early weakness, could be a nice short trade there for see how far they can take it. But that is a pretty aggressive trade. It's not high probability by any means, easy to get shaken out, difficult to trade. But you get on the right side of that trade, you can be in a nice momentum trade to the downside. But I would still be looking at, even if you're in that, it's looking for a short-term, like a short-term short trade. You're still looking to buy against these support areas. You're looking for that to run out of gas and then a potential long setup for rotations back up again. So that's how we're going to approach the Nasdaq. And this is it's always difficult because I mean this is not easy stuff to deal with. You have a medium and short term type of time frames you're dealing with, and you know if you see a little bit of strength it flopping around and it starts leaning into it starts selling off hard, you get all excited about the short side. And if you don't pay attention to your F2 and where you're at, you end up selling into a support area, and that's it. That's like a classic mistake. You get staring on the fast chart and you forget where you are in the perspective and the structure. You get caught, and then it just sucks at that point. So if you're going to try a short trade, let's be mindful that you don't sell into support. It's tempting to step in front of it when it starts trading higher, making new highs. But we are in a stage one part or stage one on the profile right now, which means we are extending. We are in a price discovery process, and we don't want to be aggressively stepping in front of it. You get lucky sometimes, you get on the right side of it. Most of the times you get caught in a shitty trade. Usually what happens. But it is tempting. You're getting out, you have great trade location, and it's you're just dying to hop on that short and then just to find it back off a little bit and then keep going or something like that. So just be careful about that. We are in stage one on the Nasdaq. We are in stage one on the ES, and I would just trade them from the long side of the market primarily. Any short trades, be patient, look for a setup and a trigger, give yourself a little bit more opportunity. Or certainty is maybe the better way to say it. And then finally, oil and gold. So gold probe to the downside pretty good, has not extended. It actually retraced those single prints in the overnight. So they could not get up here and start retracing these single print Bs. They have done it in the overnight. They have reverse retested 25, 26s. We are back down again. Now, key thing for gold, are they going to keep going lower, or are we going to retrace? So watch that level. The 25, 26s comes out. I would be on the long side, take a long trade, or look for a long trade for rotations back to the mean. If they can't get up above it, I would potentially look for a short setup for rotations and back down again. So I'm thinking gold has an opportunity right now at the excuse me, either start extending to the downside, which could be the case if the geopolitical situation changes. We do have something with Russia brewing, which could be kind of painful. So that could be something kicking gold up to the upside. The other thing is if we don't get any follow through in the downside, well, guess what? We're going to rotate right back here to the 3340s. So that's what you're looking for. You're looking for maybe a retest of that low, maybe lower. And if they start trading above this area, the 26s, look for retracement back here to the 42, 40, 42s. So those are the two trades I can see right now. But it's anyone's guess if this is how this is going to develop. If the gold is going to be priced down based on the geopolitical stage getting better, or if they think that the Russia situation is going to really freaking blow up, because it looks like they're going to stop talking nicely and start doing something right now in terms of sanctions against Russia. So anyone's guess how that's going to go. It's that's a volatile situation over there. On oil, to the upside. So oil is still trading very much in this range. Right, they're still trading very much in this range, but they backed off that lower edge. They're back down here again. We could technically see a move up here to the 68, 69s, but I would look for short setups all the way up there because we have pretty much trading in a range. So we have the range, the lower end of the range is 64 to 64.50. Upper end is 68.70 to 69s. And we are looking at basically trading back and forth in that range. So you're looking for short setups against the 67.20s, 67.60s, 68.20s, 68.50 up to the 69s. On the way, if this starts trading higher, you can certainly try a long trade. Just don't buy into resistance. So as you get close to one of these resistance areas, avoid buying into them. So try to get your location, try to get good trade location. If you're thinking about a move to the upside here, the tricky part of that doing go with type of trading in a range like this is that technically as you get closer to the edge, your short setups are going to be the ones you want to focus on. Getting long in the middle out is usually a directional trade, and if the trade doesn't develop, it's easy enough to get caught in that trade. So directional moves right now is you making a call that I think it's going to go higher, and I'm going to try that. Technically, if you want to trade more certainty, is to stay patient and look for a test of the highs or resistance areas on the way up, and look for a short setup for rotation back down again. Same thing on the way down, looking to buy weakness for rotations back to the mean. We are in stage 3. We are in a range bound market, and that's kind of how you need to trade it. It is tempting, looking at the shorter term, to hop on a long trade and see how far they can take it. And that's it's not an invalid, it's just not less as high probability of a trade. But if you want to try it, just make sure your stop is tight. If it doesn't work, you get out of the trade and manage your risk. All right. So that's how we get started on oil. Gold, same story there. So you have a couple of different trade opportunities on gold, so depending on how it develops. All right, back to the ES, and ES and Nasdaq pretty much holding. We're getting used at 8:30, so time to grab a cup of coffee and let's see how this whole thing shakes out. So we got earnings, we got trade deals, we got employment situation, we have got Fed rate announcements coming out. It's going to be yeah, it has the possibility from being pretty interesting and pretty volatile. So good trading. And I'll see you guys back at 11:30 for the next update. Later.